my next guest, I'm really excited about this because for 15 years plus, I've been buying gold. And I never told anyone because that's one of the reasons that you buy gold. Because it's a defensive, decentralized, safe, secure store of wealth. And going around telling everyone kind of defeats that object. You don't want the HMRC knowing you have a load of gold. So I just never said anything about it, but I've been buying gold. I was buying gold when an ounce of gold was 700 quid. I don't know what it is now. So I was buying gold all the way back then. And everyone kept asking me about it. And so I created a partnership with my dear friend who's about to come up, who owns a brilliant company called the Pure Gold Company. And I've never met anyone so flexible and knowledgeable and adaptable and accessible when it comes to buying gold, which can be really freaking complicated and overwhelming. He's been a guest on my podcast, and we've partnered up now, so he helps my community with buying silver and gold. And I invited him to speak at one of my events just the back end of last year, and it went down an absolute storm, and everyone loved it. So I've invited him back. So we're going to spend 15 to 20 minutes. I'm going to interview, because, look, we don't need to spend hours on this. It's actually quite simple. But if you could all stand up, please, that would be great. Please welcome to the stage, Mr. Josh Saul! Express yourself! Hello.
Hello.
Good to see you.
Good to see you.
Take a seat.
Thank you.
Joe, in no uncertain terms, warned me that you were bringing your son and that I should be careful of the fruitiness of my language that came out. And I was so conscious when he walked in, and I think I ruined it after 10 minutes. So I'd just like to apologise to you for that, because you've done all your hard work raising him, and I've just ruined it in 10 minutes.
He's come for the fruit.
Oh, great. All right, then. Well,
he's here
why
for
didn't you just say that at the start?
It's more of a treat when it comes out every 20 words rather than every other.
Yeah, that's true. Yeah, that is true. So why gold?
First of all, I have to thank you for my warm welcome. I almost feel like I need to come up here with like an acceptance speech.
Yeah, or a gift to me.
Or a gift to you.
Yeah, you can do that.
Yeah.
I take silver and gold.
I know you do.
Just before Josh asks that question, here's something kind of fun, but actually kind of smart as well. So I'm really hard to buy for birthday and Christmas and anniversary, because no one wants to buy me Patek Philippe. So people are always going to my PA now. What should we get, Rob? What should we get, Rob? I don't know what to get, Rob. So now I just tell people to buy me silver or gold coins. And basically, gold coin is if you're rich and silver coin is if you're skint. So my skint friends buy me silver coins, my rich friends buy me gold coins. So every birthday, Christmas and anniversary, I get richer and they're happy because they buy me something that I actually want, rather than seeing my face when I open it and it doesn't say Patek Philippe. And I can't hide how upset I am by this really shit gift. The other thing is Costa vouchers. Costa coffee vouchers is a way to my heart. So I've got a suggestion for you. For yourself, Christmas, birthday, anniversary, you and others, why don't you request silver coins from the brokies and gold coins from your rich friends? And what about your kids? What about buying your kids silver and gold coins for their birthdays, anniversaries, christenings, etc.? Like, if you buy a kid a silver 2-ounce coin, a Tudor beast, like seeing them hold and feel that is an amazing gift, because they just think it's amazing. So I just thought I'd share that with you, because, you know, in 10 or 20 years of doing that, you could be really boring. So why gold and silver?
Why gold and silver? So I just want to start off by saying that, we service kind of, professional clients, investment bankers, accountants, lawyers, judges, you know that. But we also service everyday people like us. We might not be financially skilled or trained, but we've managed to kind of make and build some wealth that we want to protect. And the one big common question that we continue to hear over and over and over again is actually a question that my son asked me a couple of weeks ago. So I thought I'd bring him here to actually answer the question so he could hear me answer it in front of other people. And the question is, what on earth do we do with our money? We can see from what Rob's saying, if you believe in yourself and if you commit to yourself, you can make it. But then you've got the added complexity of protecting it, preserving it, and looking after it. And with a lot of the uncertainty in the world, protecting wealth becomes harder, just because unpredictability leads to recessions, and recessions lead to loss. And we know that you've mentioned inflation a few times, and inflation it's a slow killer, because it's a bit like not brushing your teeth. Once, nothing happens. Twice, nothing happens. After a week, you start to get smelly breath. After 2 weeks, you start to grow fur. After 6 months, they start to go yellow. And after about 10 years, you start to get teeth that falls out. And at that point, there's really little you can do about it. And so inflation is something that is a real slow killer, and is something that isn't going to go away. It's going to be here for 20, 30, 50. It's going to be here forever.
It's been here forever.
It's been here forever. As long as we have cash, it will depreciate. And actually, the analogy I often give with gold is that in the 1970s, an ounce of gold was £20, right? And an ounce of gold and a £20 note could buy a man or a woman a handmade suit. And if we fast forward to today, that £20 is still worth £20. It's not enough to kind of buy you a train ticket anywhere to use that money. But the ounce of gold will still afford you that handmade suit. And so some people will say, well, gold's increased by 11,000%, which is the percentage from, £20 up until £1,600. And others would say, well, no, not really. Actually, all it's really done is it's maintained its cost of living. It's maintained its purchasing power, so you can still afford to buy the same goods and services that you could buy in the 1970s. And that's really important, because when you were talking about safety net, it's almost an illusion. You believe it's a safety net until you realise that when you want to use that safety net for whatever reason, it's actually not as safe as you thought it was, because actually it's worth a lot less. And so a lot of our clients at the moment, the biggest thing they're worried about, yes, there's kind of insecurity of banks. There's the possibility, the large possibility of an equity crash. I don't know if any of you have seen The Big Short before. Amazing film, but there's a guy called Michael Berry who the film was based on, and he has bet £1.23 billion, that we're going to see a market crash. And he did the same thing back in 2008, and he was a small minority of people that were right. And he made billions and everyone else lost money. And so people during times of uncertainty, become worried about, losing some of that wealth.
By the way, I just reached out to try and get Michael Berry on my podcast. That's what I was doing.
He'd be a great
He
one.
would be good, yeah.
Absolutely great. And so it's important that we all know the wealthy during times of uncertainty actually get richer. They wait for opportunities. And the problem with inflation is it puts a certain amount of pressure on people to do something, almost anything. Do I purchase equities? Do I purchase property? Do I put money into the bank accounts? And because inflation has put pressure on people to make decisions, sometimes it leads to chasing opportunities that leads to wealth destruction. Buying an asset class just because you think you should do something because you're going to lose money if you don't do it, but actually you're not assessing the opportunity based on, first of all, its value as opposed to its price. And value is what you get and price is what you pay.
Can I just pause you there?
Yeah.
Just remember where you're going to go. Yes, that's true for someone who's got some savvy. Most people don't even know that, and they just keep their money in money, and inflation wipes it out. I'd rather be a bit motivated and make some investments and have a few of them not great than lose at least 10% a year. So there's the other side of that. I'm sure plenty of people here have got cash savings. Like, imagine if when you logged into your bank, you saw two figures. Number one is the cash that you put in. Number two is what it's now worth after inflation. You'd get the money out of that bank account really quick. I also have a rule. With what the government tell you inflation is, I double it. Because I don't think they tell you the truth. Because why would they want to? So inflation was double digits around COVID. So I'm thinking, well, it was 20. Because they say it's 5 now. Well, to me, I look at everything, what it costs, and it's not gone up 5%. It's gone up way more. So there's the other side, because you work with a lot of smart investors.
We work with smart investors, but we also work with people that are smart but aren't necessarily skilled financially and don't necessarily have that expertise. And so I completely agree with you, but I think it all comes down to timing. You know, we look at every single recession in history, bar none. We've seen gold increase in value, whilst we've seen other asset classes fall in value. And it's because physical gold provides a safety net, but it provides a safety net that has a track record of surpassing inflation. It's not rocket science, and it's not something that we hope it will do. It's something that we know it will do. You know, we can predict certain corrections. We can predict when we're going to see a property correction or an equity correction. What we can't predict is the unknown unknowns, the COVIDs, the Brexits, the wars in certain jurisdictions. We can start to anticipate it. And so physical gold not only protects you in terms of recessions where we know that other asset classes fall in value, but it protects you in the absence of not being able to tell the future. Because we know that whatever goes down, it's a bit like a seesaw effect, gold goes up. And actually there's an old saying on Wall Street, put 15 to 20% of your net worth into physical gold and hope that it doesn't go up. Implication being is that if gold's going up, it's an indication that other things within your portfolio are going down. And so you asked me before, why physical gold? Well, some people do it as an inflation hedge. Other people do it to diversify their portfolio. Other people do it because actually it's an alternative to keeping cash in the bank, but you're removing the counterparty risk. You're not having to rely on a bank possibly not being there in a week or 2 weeks' time, whilst combating inflation. It's private. It sits outside the banking system. There's no requirement to register what you've got, like with a car. It's similar to the watches you buy, right? There's no database that says Rob owns the Patek Philippe. It works in exactly the same way with physical gold. And it's not so that you can do something that, you know, is untoward, but it gives you the flexibility to transfer wealth to loved ones and to have the flexibility of it sitting outside an estate for inheritance tax. It's tax-free. If you're purchasing certain types of UK gold coins and you're a UK resident, then you're not paying any tax on the gain. And so a lot of our clients see it as an ISA, the ability to grow wealth without paying any tax, but without the counterparty risk of giving it to an institution that might close on the weekend, not give you valuations, and might not even be able to give you your money back when you need it. And so these are the common motivations for people that are looking to purchase physical gold. Silver, it's very similar.
Come to silver in a minute.
Okay.
Yeah. So why I buy gold and why I ask Josh to come. I buy gold as a defensive investment strategy to have something that is tangible and liquid if I need it, stroke, if things went to shit. That's reason one why I buy gold. I like the liquidity of gold. Someone spoke to me yesterday, he's in the 45 and he's on ICM Elite. No, it was the day before yesterday. He's like, Rob, I've got $1 million in gold. And I'm a bit worried because I think I'm overexposed in gold and there's this property I want to buy and I need to buy it within 9 months because I'm being kicked out of my offices for rent, blah, blah, blah. And he was panicking a bit. And I said to him, well, you might use that gold in 9 months to buy a property, or you could spend 9 months trying to raise the money and being resourceful, and then basically not needing to use your gold. But I said, literally, the day or the week before you need the money, you can call it in and you can sell gold at the spot price. You can sell it immediately. It's liquid. A property. This watch is not liquid. It would take me 3 months to sell this watch because there's not many buyers for a £250,000 watch. Notice it's gold. There are all these ceramic and plastic watches. There's a white version of this. It costs more than the gold version. I can't get my head around that. Why would a plastic white version be worth more than the gold version? At least with this, it's gold on it. And I know what happens to gold. It goes up in value over time. Well, it beats hedges against inflation. So I buy it to protect, to diversify, to be secure, to be liquid. And by the way, never tell anyone that you buy gold. Never tell anyone where you buy it from. And never tell anyone where you store it. So if my business partner has an affair with my wife, at least my gold is safe. Everything else is buggered, but at least my gold is safe. So now, why silver then? Because silver's same but different, isn't it?
Same but different.
Yeah.
So a lot of the same motivations that drive people to purchase gold encourage people to purchase silver. You know, it's a hedge, it's contrarian, it's defensive asset class, it's private, it's tax advantageous. But the added benefit of silver is that it's massively, massively undervalued. I don't want to get too technical because I bore myself, but there's a ratio between gold and silver in that it used to take 12 ounces of silver to buy 1 ounce of gold. And that was the ratio between those two metals for many, many years.
Sorry, I'm just messaging myself to buy more silver. Shall I just email you?
Email me, yeah. The ratio to silver now is 90 to 1. And so you won't find an analyst or an expert on Wall Street or in the city not suggesting that silver is massively, massively undervalued. And so that you have to just take for face value because you've got analysts saying it. But actually, if we apply common sense to it and we look at the fact that actually silver is demanded very much within industry, we know that it's used within catalytic converters. We know it's used within photography. Most importantly, we know that the world's ambition to go green completely in the next 10 years, which involves electric cars, electric motorcycles, electric houses, every electric car requires 2 ounces of silver. There's no alternative conductor for electricity within a lithium battery. So that's a deal breaker. If we want the world to go electric, we need silver for every single car. If we want solar panels, that's 20 grams of silver for every solar panel. And so because silver is massively undervalued and it should be a lot higher, and because when you see gold go up, it pulls silver up with it, there's very few asset classes that tend to go up in times of uncertainty when other things are coming down, but at the same time tends to also go up during growth periods because of industrial demand. You know, when the world starts to get more certain and, you know, we're starting to see those boom years and everyone's starting to take more risk in lots of other asset classes, they're going to make more cars because more people will be able to afford them. So if they're making more cars, they're selling more cars, they need more silver. And so you've got the likes of JP Morgan that are purchasing around $400 million of silver, you know, every few months. A lot of the hedge funds are doing it quickly and quietly. When I said to you before, back in the 1970s, an ounce of gold was £20. And I think within 10 or 15 years, it had increased by 2,000%. Most people of a certain age that I speak to will either kick themselves for selling it too early, or will kick themselves for not making that decision early enough. And actually, a lot of people refer to silver at this particular point in time. They liken it to the same crossroads that gold was in back in the 70s, right? It's a bit like you hear those stories of, you know, if only I bought a Bitcoin, 20 years ago, I'd be a billionaire, right? I'm not suggesting anyone take risk with cryptocurrency, but, you know, this is slightly different. You know, it's undervalued anyway, but it's got huge upside potential and it carries all the same advantages that gold has.
So one thing I would add, which is great about silver, is it's just so much cheaper to buy. what did I pay for that 2-ounce Tudor Beast off you? What, 50?
Something like that.
And
yeah.
I think I had to pay that. But like anyone can start buying silver coins. You can start doing it now. So here's the thing when it comes to business, investing, making money. And I'd write this down. How you do anything is how you do everything. How you do anything is how you do everything. So I think silver is undervalued in the pounds and pence, dollars and cents worth, but it's also so undervalued as an asset class because it is the perfect little booster seat or stepping stone. Because what most people do, they don't really think of silver, so they wait until they can buy gold, and because it costs you nearly $2,000 for essentially a 1-ounce coin, and they never really end up doing it, or it's too slow. But you can start by buying silver if you can't yet, or remember you can, it's just whether you say you can't. Start buying silver and just every bit of spare money throw into silver. Like if I have a £50 note, I'll break it and then I'll buy silver with the rest. And every opportunity you get, start buying silver. Build all that up until you've got enough money to buy gold. By that time, you learn. So for example, people say never invest in something you don't understand. I actually don't think that's true. Here's why. You could buy a silver coin today and you not understand it. But the best way to understand how silver works is to own some. Because if you own it, you'll go and check out what the value is. And you'll watch it and you'll study it because you've got it. Whereas if you think, I'll wait until I really am an expert in silver before I invest in silver, which you'll never do. I agree you should never go and buy a company for £10 million without understanding it. But actually, sometimes you should buy things you don't yet understand as a desire to go and figure it out. And silver's just brilliant. So, just cutting to the chase, all of you in this room, show me a hand if you're up for buying a bit of silver and gold. Okay. So just so you know, I don't want any interest in making any money out of you buying silver and gold. And Josh doesn't pay me any commissions for any sales he may make. Just so you know, we're partners and we've already done that deal and that's done. So I'll never earn out of you buying silver or gold off of Josh. That's just up to you two to discuss. He's not the only place in the world that you can buy gold, but he's the guy that I go to and he's the guy that I recommend because everyone's always asking me. So Josh, if people do want to inquire with you or maybe buy some gold from you or even just figure it out, what should they do?
So the first thing is we've got some investor guides at the back of the room, to give everyone a little bit more information as to how it all works. And just to clarify, no one ever really becomes a complete expert, but there's such a thing as knowing enough in order to take that leap. And we provide a consultative approach in terms of we explain how to do it, why to do it, and also if you shouldn't do it. We never suggest that people, borrow money to purchase gold or silver. We're not for everyone. And so, because we provide that personalized consultative approach, we can't afford to, in terms of time, service people that are purchasing less than a certain amount. And that's a relatively new thing, given that we're trying to scale. But we do provide a complimentary service where we provide the guidance and we may well send them to the likes of the Royal Mint, who we're authorised distributors for. And so to answer your question, you can give us a call or you can book in a consultation with us. It can be 15 minutes, can be half an hour with one of our brokers that can give you an insight into how it works and the mechanics of bars or coins, storage or delivery, buying physical gold within a pension, which is something that we've seen a 400% increase of. And so at the back of the room, we've got enough guides probably for about 3/4 of you. And we've also got some forms for anyone that wishes to book in a consultation with my son Noah, who's 9 years old. He might be one of the guys on the phone, but actually... I promised him I wouldn't do that because he's terribly embarrassed. But no, we've got specialists that have backgrounds in property, investment banking, accounting, law, and they provide that no obligation consultation. It might lead somewhere, it might not, but at least you've got information to stay informed.
Okay, so we're going to take a break now. We don't have time for questions yet, but we've got more at the end of the day. So let me also do you mind if I share your details? Is that all right?
Absolutely.
So your email and web address. Let me just find it here. So you can go and see Noah at the back and have the 9-year-old gold broke. I mean, I want you as my dad. Like, as a kid, imagine having the gold guy as your dad. How cool is that? Right, let me just search and try and find this. I'll tell you what, Joe, in the break, could we get Josh's website and the email, and could we write it on the flip charts? Is that all right? Then you can just make a note of that. Because some of you don't need a consultation. Just make a note of it, and when you want to buy silver and gold, just go and buy it. Some of you want to learn more, you might want a consultation. Some of you in the room that have got a bit more money, or you want to make it a bigger part of your investment strategy, that might be why you want to, have a consultation. All right, cool.
We've got the puregoldcompany.co.uk. That's the URL. And the phone number will be on the website. So 0207 060 6902.
You said that too fast.
0207 060 6902. And if you email info@, there'll be someone to kind of direct any inquiry to the relevant person. But like I said, at the, within your break, we should have enough investor guides for about half to 3/4 of you, and happy to book in consultations if you have the inclination to do so.
Phone number one more time, Josh. 020.
0207
Yeah.
060
Yeah.
6902.
I'll tell you something else I nearly always do. Haven't this morning, but I nearly always carry a Krugerrand gold coin in my pocket. There's something about having money on your person that makes you feel like money. And remember, if you want to get rich, you have to be rich first. So if you have money, you are money.